Your take, initially anyway, is that we have to be focused exactly on what the growth rate is in China, what the condition of the Chinese economy is. I guess that has to inform perhaps how these negotiations might play out. So what is your top line take on that?
Well, Sunday night, our time, the Chinese are going to announce their annual economic results for 2018. Of course, they're going to say GDP growth for the year was about 6.5% because they never allow GDP growth to move outside of a very narrow range. That number is wrong. People should not pay attention to it. GDP growth was very slow in the fourth quarter if you care about GDP. So the number one thing, first thing we have to do is we're going to get more propaganda from China. In this case, it's going to be well off the mark.
Well, if you say that the numbers are always wrong and the country always keeps GDP in this range, is it significant that this time real growth is much lower than they state? I mean, I guess what's the trajectory of the Chinese economy and how is that playing into the trade negotiations?
Well, the trajectory right now is for significant weakness. Now, the fourth quarter is very weak. If you had to put a GDP growth number on the fourth quarter, I'd put it at about 2%. Now, that wasn't true 3 quarters ago, so it's short-term weakness. And the question, for U.S. trade negotiators is this weakness due to trade or due to internal developments in China? I think the answer is internal developments in China. So you should understand Chinese trade negotiators as feeling under pressure, but not necessarily due to the trade war with the U.S.
So does that make Chinese negotiators willing to tough it out? I mean, we had a discussion already this morning about the relative pain thresholds of the two countries, and China might be kind of digging in at least on some of those longer-term structural issues that the U.S. wants to press.
Well, I'm on the record many times as saying the Chinese aren't going to do what we want. So it's not so much digging in, it's just they're not even going to consider the structural changes that we want. Will they buy more U.S. goods? Sure. Do they want U.S. tariffs not to rise or perhaps be rolled back? Absolutely. So they're going to make some concessions along those lines. They were never going to give us what we wanted, in my opinion. They are under some pressure to boost domestic sentiment. So if you just want a short-term deal, this isn't a bad time to make one. If you want a long-term deal, we're dealing with the wrong government. They're not interested in a long-term deal.
And isn't the United States also in a position, though, of wanting at least a short-term deal right now?
Well, when you say the United States, I think the president definitely wants a short-term deal. He flipped on that in November and has stuck to wanting a deal since then. I don't think that's a good move for the United States. That's my own opinion. But I do think the Trump administration wants a short-term deal. I think the limits are the president needs something he can sell. He needs to say, I got this. It's going to happen. You can trust me on that. And if it doesn't happen, we'll go back to tariffs. So you can't just make any deal. But the president does want one, and I think we'll get one in about a month.
Wall Street has been obviously fixated on this issue since it got touched off a year ago. But perhaps the bigger picture concern ultimately for the markets would be a hard landing in China, would be further economic stress coming out of China or an inability for the country to re-stimulate the economy there. Setting aside even a short-term trade deal, is that a big risk right now?
I think it's a risk. Again, the weakness that we've seen in China is really concentrated in the second half of last year. It's not, a 2-year decline. But the number I'm looking at, if you want to get a gauge of risk, M1 narrow money growth. Narrow money is what we use in transactions as opposed to saving. M1 narrow money growth was 1.5% last year on Chinese figures. Their money supply figures are usually reasonable. That's really low. That's not compatible with 8-9% nominal GDP growth, which is about what they're going to report. So when you look at people using money, you're not seeing a lot of economic activity. Behind that, the Chinese are saying lending increased 13.5%. So banks are pushing money out to firms, and they're not using it. That is a sign of deflationary pressure, of very slow growth, and of stimulus that doesn't work. So it's a short term. We haven't seen this problem for a year. We've seen it for 4 or 5 months. But that's where the risk is. There could be, we do have a signal of a hard landing in China that they'll not admit, but a hard landing that we could be seeing early in 2019.
And would some kind of refreshing of exports through a trade deal buy the country time or potentially pull them out of this?
Well, I don't think exports matter that much to Chinese growth anymore on a percentage basis. I think it's more a sentiment play. In other words, one of the reasons M1 growth is so low, people don't want to use money, is lack of confidence. One way to improve confidence is to say, all right, we've got a deal with the U.S. You don't have to worry about pressure on the currency. You don't have to worry about capital outflow. That's not the only problem in China. In my opinion, it's not the biggest problem. But it would be a sentiment boost, and you might get people more interested in spending that money that they're borrowing from banks.